Okay, good afternoon. Welcome to the Market Wrap for APW for the weekend in 14th of July 2021. Stuart Williamson here at the helm. Okay, this week we've got a smorgasbord of different sorts of information for you, for your entertainment and enjoyment. Basically, I'm going to cover stamp duty. Stamp duty basically went up on the 1st of April for international buyers. That's British or foreign, any internationals who were buying in the UK. There was an extra 2% stamp duty. Okay, so let's just clarify what exactly you have to do to become a UK resident. To be a UK resident, you have to be a resident for at least 183 days in the previous tax year, 12 months pre to purchase. So if you were in the UK for that period and you bought, you don't pay a 2% stamp duty. If you weren't and you were an international person, not ordinarily tax resident, you pay an extra 2%. And so what are the stamp duty bands from the 30th of September? If you're an overseas investor, from 0 to 125 is 5%. It's 7% for 125 to 250. It's 10% from 250 to 925. And over that, it goes 15% and 17%. If you're an owner-occupier, then it's less than that. But it's very difficult to prove you're an owner-occupier if you've got an address in Dubai or Singapore or Hong Kong or Malaysia or whatever it might be. So most of the time you're going to be up for that tax. Now, it's worth thinking about it. If you're buying in joint names and one of the partners is not working, then often that will mean that that partner is not non-tax resident. They would be ordinarily tax resident in the UK. And so they may not necessarily have to pay that tax. So it's worthwhile getting some tax advice on that when you're buying property. But that's the basic situation on stamp duty. Okay, rental market update in the UK. The most recent RICS, Royal Institute Chartered Surveyors, survey is out for June. And they say that the rental market, okay, they had a net balance of 60% more inquiries compared to 48% for the previous month in May. What that basically means is that there's more rental inquiries going out there than there was previously. On top of that, we have 32% less instructions from new landlords. And what that means is 32% less landlords out there giving instruction to rent their houses out. And as a result of that, they're suggesting that there will be an overall growth in the UK rental market over the next 12 months of at least 3%. Okay, which is great news for us as international investors doing buy-to-let into the UK. So quickly, why are landlords leaving? In the UK, it's from a tax perspective and a MIRAS perspective. Mortgage interest relief source is no longer allowable, phased out last year, and so it's not so great on the tax front. However, for offshore investors and offshore landlords, we still have our £12,500 allowance, and we still have MIRAS through SPVs. So that's very positive for the rental market. As far as the actual residential market itself, the momentum has been maintained with the stamp duty holiday being cut last month. It did lead to a drop in people inquiring, but it's still 40% above the 5-year average according to Knight Frank. So it's still a very good time. And what it basically means is we're getting back to normality. So it's not going to be a huge crash and everyone's going to lose loads of money on property. It's just going to be a simple slowing down. And they still expect the market to go up this year. And I still believe we are at a sweet spot in the 18-year cycle. And now is a great time to be buying. What's going to fund a lot of this? Well, a new study by the Resolution Foundation, think tank, whoever they may be, found that Britain's household wealth had surged by 900 billion during the pandemic, well above Bank of England's 200 billion they were suggesting. It does have a large double track approach. The typical family is £8,000 better off. The richer families are up to £50,000 better off, and the poorest are £86 better off. So there's a big mixture of benefits there. But the point is, a lot of that money is going to be going into housing, is going to be going into residential, people buying bigger properties, people buying investment properties to cushion themselves for the future. A similar Citibank report has just come out and it's echoed that, saying in the offshore world, apparently people not going on holiday has been good for savings. And even though we can't escape and travel the world like we're used to doing, a lot of people are putting that to good use and investing it, not in cars, but in property. So wealth is improving around the world. And another sign of that is a flight to quality locations. There's a good article by Knight Frank this week, which talks about $10 million home sales booming in Dubai, and it could be the start of a roaring 20s there. And they're saying basically 22 $10 million homes have been sold so far this year. And that's on the back of Dubai handling the COVID crisis very well. And basically, they rolled it out very quickly, and so getting back to normality very quickly. So that's been very positive, and a lot of the super rich are moving there. And it's last happened in 2015. And what was followed on was a knock-on effect in the normal marketplace in Dubai, which picked up. Now, I'm not a great fan of buying Dubai for whatever reasons, but basically I don't believe it's sustainable. But it's good for people who are in there now. A lot of people have been caught in negative equity, who've lost money, can't sell their properties. Hopefully this will be a great opportunity for them to get out. So basically that's about it for this week. Thank you very much for listening. I hope you enjoyed that. Just to recap, stamp duty is an extra 2% if you're a non-resident UK person, but do check if your spouse is resident. You perhaps cut it. Rental markets, according to RICS, are looking very positive, 3% over the next 12 months up. Residential property market in general is looking very positive. It's not going to be a crash. It's going to be just a cooling down. And wealth is going up around the world. But it is a two-track thing. And you can see that wealthy economies, poor economies, people who have the vaccines, people who don't, which is pretty grim, really. So there we go. Thank you very much.